Well, good morning, everyone, and welcome to XPON's FY23 half-yearly results webinar. My name is Jane Lowe. I'm Managing Director of IR Department, and it's also my great pleasure to support XPON on investor relations. I'll be your moderator for today's session. So joining me today is XPON's founder and Managing Director, Matt Foreman. Now, Matt's joining us via phone today because he's having some Wi-Fi problems, but thank you for coming along, Matt.
Morning, Jane. Morning, everybody.
Good morning. And together with us is CFO Leanne Wolski. Good morning, Leanne.
Good morning, Jane. Good morning, everyone.
Good morning. Okay, so the format for today is that Matt and Leanne will walk us through the results which were released to market this morning. Should take about 15 to 20 minutes. After that, we'll have a Q&A session which will go for around 10 to 15. And if you'd like to ask a question, you can use the ribbon in the Zoom, use the button in the Zoom ribbon at the bottom of your screen. You just type your question into the function there. So with that, I'll now start to share my screen and I will then pass over the floor to Matt, who will get us started. Over to you, Matt. Thank you.
Thank you, Jane, and good morning, everybody. Very excited to be sharing our half-year results with the market today. Jane, can you just skip to slide 3? Thanks, while I set this up. So, yeah, another really pleasing half for XPON. No real surprises, I guess, in the results today as well. Most of the results we'd sort of spoken through when we released our quarterly results a few weeks ago. So, for those new to the XPON story, our mission at XPON is really to empower this marketing and customer experiences of the future. And, this is a mission that myself and the entire team really rally around. It's something that I'm very passionate about. One of the reasons I love our mission is because it's very future facing, and you'll see that come through a lot today when we talk through the business around the sort of technologies that we help our customers adopt and then extract value from, and really help navigate this very disruptive environment that's happening right now with marketing and customer experience technology. So never a dull moment at XPON. It's always something new and exciting to help our customers grow their business with. Next slide. Thanks, Jane. So essentially what XPON does is there's two parts to it. So we help them make sense of their customer data. So that includes collecting their customer data and managing their customer data. Predominantly, we'll use our customer data platform called Wondrous to assist customers with that. And once that data has been collected and centralized, and then we use things like machine learning and AI to unlock exponential growth for our customers. So customers typically will work with XPON over a number of years, and you'll see that through some of our unit economics that we'll talk through this morning as well. But it's a very long-term relationship as we continue to help them, use the data that they have and then unlock that growth for their business by utilizing that data. Next slide, please, Jane.
Sure.
So there's two parts to how we go to market. So there's our products, which I've spoken about, our Wondrous customer data platform briefly as well. So Wondrous essentially is a data platform that helps customers centralize all their customer and marketing data. It uses machine learning and AI to enrich that data, and that enrich basically means running predictions and creating insights that our customers wouldn't have had previously. So a really good example of that might be which customers have a high probability of churning. And once our customers get those insights, they're able to then deploy those insights, or what's called activate those insights, into the digital marketing ecosystem. So that could be things like Google ads or Facebook ads. It could be email marketing or SMS or content through their website or their apps or whatever it might be. So it's a very holistic solution for customers. And our other product, which is more of a future-facing opportunity for us, is our XR, or extended reality platform, called Holoscribe. That really helps customers build really rich, immersive experience and start to learn and get prepared for, I guess, the future version of the internet that might include the metaverse as well. And then we're also a Google Premier partner, so that has an advantage that we can actually bundle all of our products with Google products and sell what's called a full stack solution to customers. So we're able to then sell that full stack solution and then add value with what we have, what we call managed services. So that really helps our customers extract value quickly from the technologies that we help them deploy. Next slide. Thanks, Jane. Actually, we'll go to the slide 7. So yeah, very successful half. We landed 19 customers. So that's brand new, net new brands to XPON. through the half, and we expanded 25 customers. You can see some of the logos there of the customers that we expanded during the half. 21 of those 25 were unique, which basically means that 4 were expanded more than once during the half as well. So again, really good testament to our land and expand sales motion. And some, as you can see, some fantastic, blue chip quality businesses there that we're continuing to build value for and scale alongside our customers as well. Next slide. Thanks, Jane. So some of the key financial metrics for the half. So we exited the half at 18.2 million in annualized recurring revenue, or ARR. That was up 39% on the half before. As we discussed also in our quarterly results, that number was impacted by 3 things essentially. One of them was a softening of our usage fees, and usage fees are essentially a commission that we earn based on how much our customers spend on their advertising through all of the Google ecosystem, and also how much they spend on their cloud consumption as well. With some of the headwinds around advertising globally, we did see our customers soften a little bit as far as how much they spent in Q2. So that did have some impact on our annualized recurring revenue. Important to note, usage fees are about 10% of our total revenue, so they're not the bulk of it, but they did have an impact on ARR. And the other 2 impacts on annualized recurring revenue is we had 2 customer contracts that didn't get renewed during that quarter before December 31st, and due to our policy of how we recognise annualised recurring revenue, we weren't able to actually include that in our exit number for the half. So those that we haven't lost those 2 customer contracts, they're still very active, and they are we're still talking to the customer and being assured that they are going to renew. It's just a timing issue. But like I said, it did have an impact, I guess, on the number we could print. Having said that, the underlying growth has been fantastic, and like I mentioned previously, we landed 19 customers and expanded 25. So, still plenty of really good, strong fundamental growth happening in the business. Our revenue for the half was 8.9 million. That was up 44%. Our gross profit was 6.1. That was up 55%. So you can see we're continuing to expand our margin faster than we're expanding our revenue, which is very pleasing. Our gross margin was 69%. That's up 5 percentage points. We've stated previously that we have a target range of 70 to 80% for our gross profit margin. So we're right on the cusp of cracking that 70% number. Our cash was 7 million. So we only consumed 1.2 million in cash for the half. Very pleasing. And in the previous quarter, in the last quarter, we actually were slightly cash flow positive as well. So some of that was due to timing of renewal payments, because a number of our customers will pay annual upfront for their software license renewals, and a number of them did fall in that second quarter of this half. But that being said, our costs have very much stabilized now. Our revenue and our margins continuing to expand. So we feel like we're very much on track for hitting the sort of outlook that we've said to the market, which is cash flow break even for FY24. And finally there, 99.6% of our revenue was recurring. So the vast majority of our revenue is contracted and annuity-based revenue. So it does give us a lot of predictability in the business and confidence in the business to continue to execute on our growth strategies as well. And that was up 9 percentage points from the previous half. Next slide. Thanks, Jan. This is just a visual of the ARR growth. I won't talk to this again because I've already explained why that sort of 1.8 million was what it was. So we might just go to the next slide. Thanks, Shane. Some really great business updates during the quarter. So we managed to secure Jody Leonard as our non-executive director on our board. Jody's been absolutely fantastic, and just wanted to say thank you, Jody, for all the great value you've added so quickly to our board. Matt Daniels was also promoted to our Chief Technology and Security Officer for the group. That's really been fantastic. Matt was previously the Chief Technology Officer, but we've expanded his remit to include cybersecurity now as well. Matt's got a great team around him, and we're really pleased to see the great progress we're making, not just in our sort of ISO certified security stance for our customers, but also just our internal security stances to help protect us and our customers in this very volatile cyber world. We executed our first Investor Day as an ASX listed company. I think that was in October last year as well, and it was well attended. And there's videos of that on our website in our Investor Centre if anyone missed it and is interested. We're continuing to execute very well with our customers. Our net promoter score was at or above 85% for the half. So again, very, very strong result with customer satisfaction. And, you know, even though we are growing quickly and we expanded those 19 customers, landed those 19 customers and expanded 25, we're still maintaining fantastic customer satisfaction, which is a core reason why we're expanding customers at the rate that we are. We also achieved Premier or Premium status as a Google Cloud partner in Australia and New Zealand. That gives us special privileges. It also gives us access to better margins with Google as well. And our wondrous integration into that digital ecosystem continues. And one of the major integrations we completed in the half was an integration with the Trade Desk, which is a major global online advertising platform. Next slide. Thanks, Jane. So our people footprint, excuse me, our people footprint exited at 145 headcount. You can see how that team's distributed across the globe. That very much has stabilized as far as growth and headcount goes now. We would anticipate, and we said previously, somewhere between 150 and 160 is where we'll exit June. And I think that's pretty accurate. I think it's probably going to be closer to the bottom than the top end of that. So we do feel very confident that, you know, we've got a great team. We don't need to continue to hire as aggressively as we have previously. And we can really focus now on really bedding down that growth in our people and really empowering our people through some of the great work our people and culture team are doing. We also mentioned in our quarterly report that we're going to market, we're in market at the moment for a chief people officer to really support the growth of our people. So that process is going well. We've had some exceptionally great quality applicants, and we would hope we'll be able to make an appointment in the next couple of months. Next slide. Thanks, Jane. Also had some great news, and all happened in December. Actually, all happened about the same week in December. So we were in the Deloitte Fast 50 Rising Stars. So we achieved number 18 in that as far as the Tech Fast 50 list goes. We're number 59 on the AFR 100 Fast Starter list. As I mentioned, we're a premier reseller for Google, so that was a new status for us. And we also achieved some fantastic results with our Google Marketing Platform partnership, and we won Partner of the Year for the first time in 2022. So congratulations to our team. They did an excellent job last year, and that partnership's continuing to grow from strength to strength. And we also won a couple of other awards, Best Collaboration Award and the Loudest Voice Award as well with Google. Next slide. Thanks, Jane. So very quickly, we've included a case study of one of our customers here. This is Flight Centre Travel Group. They've been a customer of ours for a very long time, I think over 6 years. So it sort of dates back to the precursor business before XPON. And we've been able to continue to partner very closely and expand that customer over a number of years. So this case study just sort of talks to quite an interesting use case for how we can sort of unlock growth through our customers' data and their marketing technology. So we're able to use all of the data that Flight Centre have about their customers, integrate that through the full Google Marketing Platform stack of technologies as well, and then use that for what's sort of called a brand lift survey. So that enabled Flight Centre to actually run very targeted campaigns using advertising to actually understand, what their customers thought of their brand and what their brand recognition was in the marketplace. So you can see the results there. Before we worked with them, their survey response rate was 0.1%. After, it increased to 50%, so a massive increase in engagement from their customers around this, and an overall uplift in their brand of 6.9%. So for a brand of that scale, 6.9% is quite significant as well. So we're very grateful to be able to work with customers like Flight Centre and to have them trust us and continue to sort of invest and expand with XPON across our full stack. Next slide. Thanks, Jane. So just having a bit of a look at our revenue and margin growth over a period of time. So you can see here the purple bar chart is our revenue growth half on half over successive number of halves. The blue chart there is our gross profit, and then the yellow line is our gross margin. So our revenue had a CAGR of 37% over that period, and our gross profit had a CAGR of 56% over that period as well. So, like I've spoken about, that revenue growth really does benefit from our land and expand strategy. Our gross profit's really benefiting from higher margin product mix, so an increase in licensing revenue and an increase in usage fee in the mix. And as we continue to execute, as I said previously, towards that 70 to 80% range of targeted gross profit Next slide, thanks, James. So just a bit of colour around our revenue and I guess the predictability of our revenue. As I mentioned right at the start, 99.6% of our revenue was recurring, so very, very strong annuity streams. You can see in those bar charts there, in the first half of FY22, we had 9% of our revenue is project fees, which is non-recurring, and you can see in this half there's 0%, or it's 0.6 of 1%. So, great mix shift as we're continuing to drive annuity revenue streams, and you can see the increase in licensing fees is continuing to increase as part of the mix as well. From a region perspective, you can see there that we've gradually been able to start to shift the mix. So we are starting to generate more revenue from the UK as a ratio. So we're sort of 47-53% to UK 47, Australia 53. And then again, that bottom donut there can just sort of demonstrate that shift in recurring versus non-recurring revenue as well. Next slide, thanks, Jane. And then our unit economics is something that we're very proud of at XPON and something that we're continuing to execute quite strongly against. So our average customer monthly retention was 99.4%. So very, very strong customer retention. It's very rare that we churn customers. And you can also see that in our revenue retention there, which was 178%. So, that number basically means if a customer starts with us today, and they're spending $100, in 12 months' time, they'll be spending $178 on average. So that expansion of our customers is really demonstrated through not just the retention, but also the lifetime value as well. So that lifetime value of $765K, that's really been driven by an increase in gross margin and an increase in average revenue per customer via those expansions. Our cost per acquisition was $68,000. So there's an 11 times ratio. So we make 11 times back what would cost us to acquire a customer through the lifetime value of that customer. And it takes us 11 months to get a payback on that $68,000 as well. And that's very much within our target range. Been very transparent that we're targeting 12 months or less from a payback on our cost per acquisition. And we're very comfortable that we continue to execute in that range. So I might hand over to Leanne, our CFO, and Leanne can talk you through the financials. Thanks, Leanne.
Thanks, Matt. Okay, I am pleased to report revenue increased by 44% to 8.9 million, assisted by the benefit of 19 landed customers and 25 expanded customers over the period. Our gross profit grew by 55% to $6.1 million, and gross margin expanded by 5 percentage points, assisted by operating leverage achieved from scale benefits with some minor impact from lower usage fees. The operating expenses increased by 70% to 9.3 million. The increase in operating expenses is consistent with the stated use of IPO funds to support the group's objective of scaling and global expansion driven by the group's growth strategy, including investments in sales and marketing, overall operating capacities, and listed company expenses. Please turn to slide 18 for the balance sheet, Jane. XPON's balance sheet is simple with a small borrowing balance of $0.1 million. The cash and cash equivalent balance of $7 million, representing a net decrease in cash of $1.2 million from 30th of June to 31st of December 2022. The small borrowing balance of $0.1 million is a loan from National Westminster Bank as part of UK government's response to COVID-19 at a fixed interest rate of 2.5% for a term of 6 years. The contracted liability balance of $1.1 million, representing a payments received in advance from customers with revenue to be realized in future periods. The current cash position will support the group's targeting cash flow break-even for full year FY24. Next slide, please, Jane. This is the cash flow bridge. The operating cash receipt of $9.4 million, representing a cash conversion rate of 106% to reported revenue of $8.9 million. benefiting from timing of payments of annual contract renewals. The group reported a net decrease in cash of $1.2 million to $7 million during the reporting period. XPON is a CapEx-light company. The capital expenditure includes a rollout of a new ERP for the group over the period. XPON remains confident that it is on track and well positioned to drive organic growth and achieve our targeted cash flow break-even for full year FY24 with the current cash balance. I now return you to Matt.
Thank you, Leanne. That was great. So yeah, very good segue, I guess, just to wrap up, just to talk through operating leverage and cash flow break even. So this is something that we spoke about at our Investor Day last year. And, we feel like there's a very strong opportunity. It's a once in a generation opportunity, to be honest. The disruption that's happening with this technology at the moment, and the convergence of all this disruptive technology like AI and like cloud and like the metaverse, and all the things that we do at XPON, it doesn't happen very often, and we're very excited that we've landed in the right place at the right time. So we add that with our platforms and our technology and our people. It really helps us expand what we do with customers. We've got exceptionally strong unit economics, as we've spoken through previously, and all those things together really help drive that operating leverage to deliver, targeted cash flow break even for full year next year. So one of the metrics that we look at internally at XPON, actually, Jane, just next slide, thanks. One of the metrics that we use internally to understand operating leverage is revenue per head and gross profit per head. Now, we're targeting a benchmark of 180,000 revenue per head. 135,000 gross profit per head. So you can see there on that chart for the last quarter that ended in December was 125,000. So we've got plenty of scope there to continue to increase the revenue without having to increase costs substantially. So there's a lot of capacity that we've built into the business now, and that's really the job of the team at XPON is to really unleash that capacity and really deliver on that target of 180,000 revenue per head. So as we continue to scale, we'll be able to scale incrementally our cost base, and using this metric as a very clear guide for us over time. Next slide, thanks, Jane. So I've just sort of touched on this briefly, so I won't go into it in a heap of detail, but there's data security is a key driver for XPON as far as the sort of macro sort of tailwinds go. We saw here, particularly in Australia with Optus and Medibank and those cyber breaches last year, just how important it is to get cyber security and data security right. The third-party cookies are going away. We've spoken about that quite often at XPON, how privacy regulation is really driving a change in how this technology works and how vendors are tracking what consumers do online. The cookies are still, third-party cookies are still available through the Google ecosystem. 76% of the browser market is Google Chrome, so that's still to go away. Google said that'll be sometime in 2024. So still a very, very big chunk of the market that's yet to be impacted by this change, but are definitely seeing in the business that the industries that are being impacted by this, particularly industries like media and publishing, for example, are definitely acting with a strong sense of urgency right now around how they adapt to that. Extended reality, or XR, as we spoke about with our Holoscribe platform, is more of a future-focused thing for us. And then really from a consumer perspective, it's these really rich, personalized experiences, and new technology like ChatGPT and generative AI is really going to help drive more and more richness and personalization in those user experiences, and sort of bodes very well for the future for XPON. Okay, next slide. Thanks, Jane. So our 5 growth pillars, and again, this is something that we've spoken about pretty regularly. So we really want to focus on strengthening our existing solutions, and that may include acquisitions. There's nothing imminent right now, but we're certainly turning our mind to what that might look like in the future as far as what might be a strategic fit for XPON. Expand our value creation and product adoption from existing customers, which we're demonstrating that we're continuing to do. Really leverage that investment we've made in our sales and marketing capacity and capability. We feel we're well resourced in that area now, so really it's just about executing on that. Continuing to expanding our channel relationships in that vendor ecosystem, and then continuing to expand that wondrous platform ecosystem. And like we've mentioned today, that's with global vendors like Trade Desk and other global ecosystems as well. And next slide. Thanks, James. So the outlook, like we've said, we remain confident and positive that we'll hit this cash flow break even for FY24 as the business starts to tip into operating leverage and we achieve economies of scale. Very much for now focused on maintaining organic growth momentum, continuing to execute against our leveraging the investment that we've made in our people and ops, and really help scale the business through just more efficient, better, more scalable internal systems and processes. And, the appointment of this new chief people officer is a key ingredient to that. Continue to focus on that product and customer mix and try and sell and drive more high margin ratio products like licenses and usage fees. Very much focused on developing out that sales and marketing capability and really accelerate the pipeline so we continue to land new customers at the rate we've been or at a faster rate than what we've been landing them, and then steadily increase our customer revenue retention like we're continuing to prove that we can, and execute very strongly against the expand piece of our strategy. So that's the focus and that's the outlook for the remainder of this financial year. And that is all we have from a presentation today. So thank you very much. Over to you, Jane.
Thanks, Matt, and thanks, Leanne. So with that, I will now open up the floor to questions from the audience. Reminder, if you'd like to ask a question, you can do so using that Q&A button, which is in the ribbon at the bottom of your screen. And we have had a few come through already, so we'll kick off. So the first one, Matt, project revenue down to 0%. Is this a leading indicator of slowing revenue growth across your other divisions? E.g., typically we see project revenue associated with the onboarding and development of clients and expanding relationships. Does that align with XPON's model?
I think what we're seeing with XPON's model is it's shifting. I think historically that would have been a fair assessment. I think what we're seeing with our team as we're continuing to optimize how we sell this full stack to customers is we're able to actually sell them in a recurring revenue model rather than a project-based upfront model. So I don't think at all it's a leading indicator to softening in the other areas of the business. I think it's just an optimization of how we're going to market and how we're driving stronger high margin revenue mix.
Thanks, Matt. Okay, next question. I'm seeing a slowdown in some segments of the media and advertising industry. What are you seeing and is it impacting your business?
Certainly from a media and advertising perspective, and we mentioned this with our usage fees as well, because essentially we earn a commission or a clip of the ticket on what our customers spend on their advertising, and that was softer, particularly in Q2. And I think you've seen that all over the globe when you look at Google and Meta's sort of softening of their revenue against that as well, and we're part of that ecosystem. Interestingly enough, though, we did see that number bounce in January, so that's interesting. So, it seems to be that maybe some of that softening from last quarter is starting to turn now, and customers have a little bit more confidence. But I don't think it's going to accelerate for the next quarter or two. I definitely think it's a watch and see scenario as far as how the market's spending, because typically what we find and what I've found over the decades that we've been in this industry as well is when the economy starts to get a bit wobbly, one of the first things companies do is cut their advertising budget as a way to sort of just stem costs, and typically they cut it 20-30% as a starting point, and you can actually see that in the usage fees because they're down about 20-30%. So I think we'll just watch and see, but yeah, certainly interesting time.
Thanks, Matt. Leanne, I might invite you back on screen as well. Got a question here. Hi, Matt and Leanne. Christian Angelis from CCZ Equities. Hi, Christian. 3 questions from me. 1, how much of the employee expense increase of 2.5 million relates to new employees versus existing employee wage increases? Then he's got another couple of questions, but we might just pause on that one to give you a minute to answer that.
Do you want to take that one, Leanne?
Yep, I will take that one. Hi, Christian. The majority of the employee expenses for this half are predominantly from for new employees as we continue to expand and scale our business, and it's pretty much consistent with what we have said, how we will use the IPO funding. So the 2.5 million increase majority are new employees as we continue to expand our business.
Thank you. Okay, so question 2, do you think the operating cost base in the first half is the run rate for the business, or is there more cost-based growth to come in?
Okay.
Yeah, you want this one?
Yep, I will do this one as well. I do believe that the first half, because most of the growth came in the first half. However, due to the timing of the growth, so you might not have seen everything in the first half as yet. Everything being equal, because of the timing of some of the new employees get added into the business. So I think there's still a little bit more of growth coming into the second half, but it should not be like what you have seen for the first.
Thanks, Leanne. Matt, anything you want to add to that?
No, I think Leanne covered that off pretty well. Look, I think, you can see this in our cash flow as well in the quarterlies. Like, the cost is incrementally increased as the growth of the business is increased, but it is stabilizing. The vast majority of our costs are people costs. We're at 145 headcount. It's not going to be materially more than that for the next 6 months. Like I said, it'll be somewhere between 150 and 160. So there's not going to be big increases in costs. And I think, like Leanne said, as taking a half and annualizing it is probably not the right way to forecast it, because there's more costs in the back of the half that weren't in the full half. But certainly, I think as we go into Q3, that's where we should be able to start to see a real strong stabilization of the costs.
Great, thank you. Okay, so back to an operational question now. How does your offering around first-party cookies differ from other market players like the Trade Desk, and why do you think you will be competitive against them?
Yeah, so we don't compete with the Trade Desk. I think it's a different solution, a different offering. And in fact, we partner with the Trade Desk. So we see the Trade Desk as an activation endpoint. So by that, I mean our customers can use all of the machine learning and AI predictions that our platform generates about their data, and then send that into the Trade Desk so they can run advertising against those customers for different, use cases. That could be churn, it could be increasing revenue, it could be increasing, e-commerce basket value. There's lots of use cases that customers can execute on. So I think our offering is unique because it's a couple of things. Firstly, it's not a full suite solution. So we can plug and play into any technology infrastructure our customers have already. So while we may be quite closely integrated online with Google, we're not exclusively Google tech. So if our customers have other tech like Microsoft or Amazon or Salesforce or whatever it might be, Wondrous plugs really seamlessly into any ecosystem. So it's not a swap out, but it's an addition. And the addition really is around accelerating the growth of all the stuff they've already got. So the other real key differentiator for us is its ease of use. So this is a very, very complex technical problem that we solve, and typically there's lots of data engineers and developers required to solve for this, and data scientists to build algorithms and things like that. We've taken all of that complexity, built it into the platform, and abstracted it with a really beautiful user interface. So what that means is frontline marketers, so these are people that are campaign managers that don't have technical skills and don't know how to write code, can actually access really super advanced technical capabilities just through a very simple user interface. And most of the other competing platforms for Wondrous still require technical capabilities to extract the maximum value. So we find that helps differentiate us quite strongly.
You just turned that last answer into a sales opportunity, but well done, Matt. Thank you.
Look, always be selling, right? So
yeah, very good, very good. Just a reminder, if you'd like to ask a question, you can use the Q&A button in the ribbon at the bottom of your screen. And we do have one here. So looking at the balance sheet, a contributing factor for the reduction in cash at bank is the increase in trade receivables, up 16% from PCP. If possible, can you shed any light on this increase in AR, Leanne?
Okay, so there is, we actually have provided a breakdown of in the balance sheet for the receivables. What you'll find is actually $500,000 contract asset in the balance sheet that represents the group have provided services ahead of agreed payment terms for customer service contracts. So that's where most of the increase has come from in terms of AR. So yeah, everything being equal, but we are a business model. Have we had those money coming in, like different payment terms, then our cash burn for the half would have reduced. But this is our business. I think it's still very reasonable for us as we continue to grow to come in with a net cash decrease of 1.2 million for this half.
Thanks, Leanne. Okay, Matt, perhaps another operational question for you. So which verticals are your new customers coming from? Are you finding that you are strong in certain verticals?
Yeah, actually, it's a good question. I sort of alluded to that previously. Like, what we're finding is industries that are being impacted with a sense of urgency around these third-party cookies going away are certainly acting with a stronger sense of urgency, and specifically media and publishing has been a very strong vertical in the last half for us. I think media and publishers, particularly digital online publishers, have relied heavily on third-party cookies because they sell advertising against that data on their websites and digital properties. So with that data going away, it's eating away at their revenue and having a revenue impact. So we've certainly seen some fantastic traction in that space and being able to help them sort of understand how to utilize their first-party data they may have on their website visitors or their subscribers or whatever it might be, and then really help them optimize their yields from their inventory as well. So one of the advantages of using first-party data in that industry is they're actually able to charge a premium for some of their advertising because the targeting is much more effective. So we help them with yield optimization and to plug some of those revenue gaps from the third-party cookies going away. So that's been great.
Great. You briefly touched on this before, but question here. So Chat GPT has been in the press quite a lot lately. What sort of impact do you see technology like that having on the XPON business?
Yeah, look, I'm a geek, so I'm going to get excited about geeky technology like this too, right? But yeah, I think it's got tremendous opportunity and potential for us and really to continue to propel our growth. I think one of the things with AI, particularly generative AI, when it comes to generating really personalized content and personalized information, is it needs first-party data to be trained on and to learn on. And it just so happens that that's what our Wondrous platform is fantastic at, is managing and utilizing AI and machine learning over the top of first-party data. So I think that bodes well for us. We don't have a generative AI offering yet. Certainly something that we're looking at as far as our product and our product roadmap goes is how that might fit and what our customers' needs might be there. There's still a long way to go in understanding this space. It's quite new. There's going to be a lot of road bumps from the big vendors. You would have seen Google and Microsoft in the press going to war. I think the war is far from over. I think there's still a long way to go as to who's going to win that battle. But there will be bumps because it's new technology and I think everyone's figuring it out as they go. But, I'm certainly very excited about what it means for our customers and what it means for XPON, because I think it's we're utilizing it very heavily inside of XPON at the moment to utilize it to drive efficiencies. So a lot of our team are using it to just help them do more work with less time, which is fantastic.
Very cool. I think there's a lot of experimentation going around the place.
Yes. Yeah.
Right. Okay. So question here on inflationary pressures. Are you seeing any, and if so, how strong are they in the XPON business?
Yeah, look, I don't think we're seeing anything different to everyone else. I think there's certainly been pressure, particularly on wages in the tech industry. A lot of our hiring has been done now, so we're not seeing continued pressure on wages because everyone's got on contracts and the bulk of that's been done. But we did certainly see, in the back half of last calendar year, that started to stabilise a little bit as far as wage increases go in the tech industry. So that was a nice glimmer of hope. But I guess like everyone else's usual inflationary pressures, we've been quite fortunate, and you can see in our gross margin as well that we've been able to offset any cost pressure in the business with margin expansion. As we renew customers, we look at different ways to contract them and how to offset some of that inflationary pressure inside of our business with better margin or better pricing or better terms or whatever it might be with customers. So I don't think it's had a material impact on our business.
Thank you. I'm just conscious we're getting pretty close to time, so I think we'll take two final questions. One here on Vietnam office. So what are the benefits of the now registered office in Vietnam?
So our rep office in Vietnam, probably the biggest benefit is the people offering, because what we're able to do as a rep office is offer our team there more benefits as far as social insurances and health benefits and more sort of robust employment benefits as well. So it very much has been a focus for us around talent attraction. We've got nearly 60 people there, I think, at the moment. That will continue to scale as well. There's some fantastic talent. We want to make sure we've got a good offering for talent in the market there. So that was really the key driver for us, was to be able to offer a more robust benefits sort of solution for our talent. It also helps streamline the execution of that as well for us. So it's a little bit more administratively streamlined now that we've got a rep office there as well.
Great, thank you. Okay, so we'll wrap up with this final question. Is the business where you expected it would be tracking to at this point in its life?
You can never ask an entrepreneur that question, because I always say I want more. But look, I'm very, very happy with the way the team's executing. Despite a couple of little road bumps with timing of contract renewals, I think the business is executing fantastically, and the growth's continuing, and it's there, and all the metrics are correct. So I couldn't be more happy with how it's going.
Excellent. Well, that is a great note to finish on. Thank you to everyone for making time to join us today. All the material that we've presented today is up on the XPON website at xpon.ai, and feel free to reach out if you have any questions. And with that, Matt, I might just hand back to you for any closing remarks, and then we can let people continue on.
No, probably not much more to add. I think we've covered a lot, but thanks everyone for your time and your interest in XPON. And let's continue to execute, and we'll see you on the next quarterly.
Thanks, everyone. Thanks, Matt. Thanks, Leanne.
Bye.
See you. Bye.